Joined by Runa, who's the CEO of Development Partners International, to just come and give us a sense of how Africa can survive the current context.
Thank you very much. I think Africa is not only surviving, it's thriving. In fact, what I say is this is the time for Africa to leapfrog ahead of other countries. If you look at the statistics, while there's contraction not only in the emerging world, but in some emerging countries, Africa is still growing at 2 to 2.5%. If you look at Africa overall, it's actually the fastest growing region of any place in the world other than China and India. Look at emerging certain African countries. Ethiopia is growing as fast as China. And there are certain countries like Rwanda growing as fast as Vietnam. As a result of that, actually, the private equity in Africa is still there. And while there is what I call event correlation, when all the stock markets went down, some money went out of the stock markets in Africa. After that, actually, there's still money in Africa. Private equity is there. African banks are doing a lot better than banks in emerging countries. They're still liquid, they're still lending, and so credit is still there.
Let's investigate that a little bit more, because you look at South Africa's most viable, capital market, which is the Johannesburg Stock Exchange,
Right.
and recently we're seeing an improvement in equities, and there's a direct correlation with the improvement of the South African rand and big deals like Vodacom and Vodafone. We're not hearing of these big deals in other African countries. We're actually hearing of sovereign bonds being postponed as countries try to improve on their credit ratings and their currencies. So what can they do at the moment to encourage those investors who are risk averse to say, we have all these fundamentals in place, but we also have tradable currencies, we also have capital markets that work properly?
Right. Well, again, the currencies actually had a one-time decline, which is against the dollar, but that happened to currencies all over the world. So did, the euro, so did the yuan, everything, because of the strengthening of the dollar. Before that, however, African currencies were pretty much delinked from the dollar, and now we're seeing that happening again. So, and if you talk about what can countries do, some countries are actually doing quite well. So you have to disassociate. South Africa had a bit of an economic issues over the last couple of years, but if you look at countries like Nigeria, they're still doing well. Even there was a decline in the oil prices, it's come back up again, it's doing fine. Other countries, and I cite Ethiopia again, which is not correlated to exports, they don't export much, a bit of coffee, it's internal growth, they're doing very, very well.
I'm glad you mentioned coffee, because this is something that's been, we've been murmuring about at this forum, but not quite talking about. And that's the fact that countries that are not resource rich, the soft commodity producers like Malawi, are now recording the fastest growth rates in Africa. And those are the stories we're not telling. We're still focusing on Angola and Nigeria and Botswana and South Africa, who have been victims of the fluctuation in commodities prices. What is Malawi doing right when it is not endowed with these resources, the oil, the diamonds, the gold, the platinum?
Yes, what Malawi is doing right is it's growing through internal growth. And like a lot of countries in Africa, which were criticized 10 years ago because they were not like the Asian tigers exporting, they're actually growing through internal growth. The market internally is growing. There's fiscal responsibility. So the country came into this whole crisis with reserves, with good banking system, with a lot of fiscal responsibility. And there are other countries, not just Malawi, like that. And those are the countries that are not only surviving, but they're thriving, as you say.
All right, entrepreneurship is a recurring theme here, and people saying social enterprise, support the small to medium enterprise, be responsible in how you invest, but the caveat, where is the credit coming from? Because essentially the African private sector is competing head-on with the African government in the bond markets to bring credit and investment into the economy.
That's absolutely true, but the percentage of government in the economies of Africa is overall declining over the years, and that frees up, as you say, resources for the private sector. Funds such as ours only invest in the private sector. Over the last 10 years, there's more than 15 funds that were raised like our funds. We only put credit into the private sector. Banks like UBA Bank in Nigeria, where I'm on the board of, but other banks also, they're very much focused on the private sector. Yes, they do work with the government, but very much on the private sector. So I do think over time there'll be more capital available to the private sector.